Have you wondered what financial advisors actually think about finances? This is your sneak peek at the conversations within Financial Design Studio. Michelle Smollenberger, the CEO here, will be your host as you go behind the designs.
All right, welcome back to the podcast. Today we are talking all things insurance, and I have Trevor Meyer with us. Welcome, Trevor.
Howdy, thank you for having me.
Yeah, so Trevor handles a lot of our insurance planning topics, so this is why I said, wait, we need to bring you in. Like, we have to hear from you, and we're going to find out why and just kind of like how that your personality is so, like, it's just so interesting because we joke with you a lot that you're kind of like our worst case scenario guy. Like, Trevor's always thinking worst case scenario, which ties so well with insurance.
Well, I think there are balances to having things where, hey, things can really work out, but what's going to happen when things don't work out? So,
yeah.
But yes, I like to think about worst case scenarios.
So we always laugh because we're always like, okay, Trevor, thoughts? But no, Trevor, so you're a financial advisor here, one of the partners here. And so, yeah, it's really fun to kind of hear your perspective on things. So this will be really helpful for everyone today.
Sure.
We're going to start a little bit differently. I want to start with kind of a lightning round of common mistakes that you see. So whenever we work with a new client, we do a plan. We really analyze everything in their finances, every area, which insurance is one of those. And so, so this is where you dig in deep and say, here's some things we found. Here's what you could do better. Here's maybe something you don't need. So in all of your experience of looking at a lot of different policies for people, let's do a lightning round of the most common mistakes or most common things you find with different types of policies. So I'm going to list the type of policy, and then you just list the most common things. When you're done, we'll move on to the next one. Does that work?
All right, we're in a hot seat. Okay.
Right.
How much time do we have on the clock?
We're going to start. So like right here from the beginning of the podcast, you're going to get something. So you're going to be like, wait, do I have this? Am I making this mistake? Sure. Is this something I need to look at? So this will be great. Okay, so home and auto insurance.
Home and auto, also referred to as property and casualty. Top thing to look at right away is your liability limit on these policies enough to cover your net worth, right? So on your auto policy, it's a split limit. So there are three numbers generally. There's, like, a lot of times you'll see 100, 300, 100. What that means is there is bodily injury per person, then per accident, and then property damage. So I know that's not exactly lightning round there, but that's all on auto. Home, there's a liability limit. Is that limit enough to cover your net worth? Okay,
so looking at those limits, and so do you commonly see that that's a mistake that people make, that not having the right limits?
Correct, yeah. A lot of times it's insufficient, right? So we see that clients' net worth is higher than those liability limits.
Yeah, and we're going to get into why that matters, so that's good. Any other common mistakes? Or is that...
The other one to probably think about there is your deductibles, right? So a lot of times people have low deductibles or have coverage for a vehicle that is 15 years old, that the actual replacement value of that is really close to what your deductible would be. So why are you carrying coverage on it?
Yeah, so it's like paying for something you don't need.
Exactly.
Okay. All right. Life insurance, most common mistakes.
Not even having it. That's always a big one. Number two would probably be only having it through your employer. Not that that's a bad thing in itself, and we can get into that. Having something is better than nothing. But then probably three is not fully understanding what you actually have, because there are a lot of different types, and the type you have is really important to know and understand, because it's a small portion of your financial plan, but it has significant impact on a lot of the other areas of your financial plan as well.
Okay, yep, that's good. All right, disability insurance.
Okay. This is one that's often neglected or forgotten about from folks. Most of the time you'll get this through your employer, but not always. So one, the common thing is check to see if you have it. But then two, another check is there a way in which you can pay the policy premium or at least the taxes on that premium? Because in doing so, you'll convert the payments or the benefits from that policy if you ever make a claim from a taxable benefit to a tax-free benefit to you. And we can get into the specifics what that
we
looks
will.
like. But
We're going to. All right. Health insurance.
So this is actually probably one of my more fun ones that I get to look at for clients, because more often than not, you'll get a chance to see 3 or 4 different policies at a particular employer, and if both spouses work, now you double that, right?
Yeah.
So trying to find which policy makes sense for that client, whether it's a high deductible plan, a low deductible plan, what's the out-of-pocket maximum, what's the co-insurance amount, and finding all of these variables and seeing at a given level of medical costs incurred, what's going to make the most sense. So that's kind of the analysis side, but I would say in terms of lightning round, what's the first thing is, one, just make sure you have it, just because there's a lot of risk associated with not having health insurance.
Yeah. That was a good lightning round. Thanks for
Awesome.
sharing those. We are going to talk about why each of those kind of are mistakes, or not even mistakes, but like just catches, things that we note, and it could be done differently. So we're going to dig into that. So that was helpful. Okay. Thank you. Now we're going to step back and we're going to kind of talk about a little bit of the why. We even look at this, but one of the unique things about you here on our team is we don't sell any insurance. Like we don't sell policies to our clients. Now we're
Never have, never will.
Exactly. And we're talking about insurance because it's important. So we know that people need it. We don't sell it. So when people need it, what do we do?
A lot of times we'll refer folks out to an insurance agent. So whether they are a broker, so they shop a lot of different insurance companies, or maybe it's a captive agent or something like that that they have a good relationship with. So we can put clients in touch with actual insurance agents that can help place certain contracts. So our role is really just from, hey, let's look at what you have or don't have, and is this a particular gap? It's one of those things that we want to be really careful not to make recommendations where it's not applicable or doesn't make sense. We're just kind of coming alongside as a guide, because we're not placing the insurance or anything like that. There's a fine line there.
Yeah. No, that's great. Okay. So, and I just wanted to clarify that, because it's not that we don't think people need it and that's why we don't sell it, but we want to be sure that we're staying kind of on the client side, where we're saying, we're telling you what you need, and now you can go buy it. Sometimes people will have friends that sell insurance and will say, that's fine, you can use who you want. Here's what you need, so be sure this is what you're getting. So we kind of work with them just to make sure through that process that's what they're getting. So that's helpful. So one unique thing about that is that, so you maintain your life insurance license.
Correct.
Why do you do that?
So in Illinois, there are certain states where they have laws that say in order for you to provide any sort of recommendation or review policies or whatnot, you actually have to maintain insurance license. So in Illinois, and I wish I could find the actual terminology, there's actually an Illinois law that says if you are going to provide recommendations on life insurance, you have to maintain a life insurance license. So looking at that, it's one of those things, okay, well, this is something that I think is really important to help walk clients through. So let me go get that, even though I have no intention to ever sell a life insurance policy. So.
Yeah, because part of that is you just staying informed, staying aware of what's new, and really just staying up on like that continuing education of being aware.
Yeah, I mean the as boring and non-fun as insurance may sound, there are actually quite a few changes that happen throughout the years. So it is important to always stay up to date as to what carriers are doing, how is the life insurance or any insurance landscape changing, and what are the things that we need to be mindful of on a day in and day out basis.
Yeah, it's so interesting because it's just kind of like, okay, it's insurance. And when people bring us, like we ask for the booklets. I mean, if you have a life insurance policy that you've bought yourself or an annuity or something, and I feel like it's kind of like the part of the documents that can't get scanned because it's like bound, and so they bring it in and there's like, I mean, here's everything, here's if you need this. And I feel like we always say, oh no, Trevor wants to read through that entire thing. So yeah,
I am the nerd because it's one of those things where the details of every contract are really important, and what you can do in that contract dictate what the likelihood of even making a claim, whether it makes sense to make a claim, whether you want to keep the contract. There's a whole lot of input and variables there that every life insurance contract is first and foremost a contract between you and the insurance company. So understanding what the terms of that contract are really important.
No, that's great.
Yeah, I'm a nerd.
Okay, so, well, with insurance, and because we kind of joke about this, saying, you're our worst case scenario guy, but is that kind of at its very core what insurance is? Like trying to think about the worst case scenario?
Yeah, I think that's a good description. The way I tend to view insurance is, as we go about our daily lives, there are certain things that can happen in our lives that we're not prepared for. And especially in the financial realm of our lives, there are certain risks that we take on. So when we're starting out a career, there's a risk that we may die and we may not be able to provide for our family. So if that is really important to you, that's where life insurance can step in and meet that need. Now, let's say you're closer to retirement. You've already saved up for retirement and you have your 401k funded, your IRAs funded, maybe a brokerage account, any one of those things. Well, maybe at that point, you're not as reliant on life insurance. Now, that's not to say you're not completely absolved or you don't need it. Yeah. It's one of those things you have to look at it on a case-by-case basis and say, okay, for my particular situation, do I need this insurance coverage or not? And in the instances where we say and we look at things that say, well, maybe this isn't that significant of a risk for you. This is something what we call self-insure, because let's say that worst case scenario thing happened to you. Well, if it doesn't negatively affect your financial plan in terms of the likelihood of success, well, it doesn't really make sense to have another company come in and provide coverage there if it's not needed.
Yeah, no, that's helpful. Yeah, I think it's just interesting because you even highlighted that at different times in our careers and our lives, we need to be thoughtful of different things that affect our insurance.
Exactly.
So even like when you're near that retirement, now it's, I have this net worth that I need to protect. On the other side, when you're just starting your career, you don't have all this money you're protecting. You're protecting against the fact that you won't work all these years to save that money. And so you're protecting your family in case that happens so that they will have money in that case. So yeah, it's just interesting how it just changes.
Yeah, I mean, one of those kind of case in point review items that we look at with clients is if we're working with a young professional. So let's say someone that's early to late 30s or maybe even their 40s, I would almost argue that you would be much better off making sure you have your disability coverage in place more than your life insurance. Like if we look at an actuarial table, you're far likelier to become injured and not be able to work than you are to die. And so understanding that that's a risk. Now, dying is a more catastrophic risk and it kind of hits you in the face more. But if we look at actuarially speaking, if you're going to become disabled, well, you want to make sure you have disability coverage in place, at least at the early part of your career, because that's the bigger risk to you generally.
Yeah. Okay. I think this is actually a really good idea for us to, what we're going to start talking about is how this is part of a financial plan. So this is one piece of protecting what you're saving. And when we put this together for clients, we call it a blueprint. We basically put everything about your whole financial situation on one piece of paper. So it's kind of a diagram. And the way we do it and how we explain to clients is that something over here in the insurance section is literally protecting what's over here in the investment section or business section, things like that. And so you can see just the core structure of your finances, and it just really helps people to understand why they have insurance. Because a lot of times, a lot of us probably just feel like it's just one of those expenses I pay and it just keeps getting higher. And, it's not like a fun thing to pay for because you're protecting.
Yeah, I can say insurance is probably one of those few things in life that you should be willing to pay for it and hope to never use. That should feel like a wasted expense. Now, you want to optimize that wasted expense. You don't want to pay more than what you need. But it is one of those things that where we have areas in our lives that we have risk and we can't afford to take that risk on ourselves, it's really important to say, hey, how can we have someone else come in and help absolve us of this risk?
Yeah, yeah. Yeah, so one saying that I'm thinking of, I heard years ago, a time when you know you need life insurance is when you love someone or owe someone. And what people mean by that is if you love someone, so you have maybe a young family, you want to make sure they're taken care of. If something were to happen to you and you don't have these earnings for the rest of your life, they're going to have life insurance funds. Or if you owe someone, again, in this young family scenario, you have a mortgage, things like this, you need to pay off or you want to have paid off. It was an interesting analogy or just a way to say that really stuck with me. And I'm like, yeah, it's true. Because people, I think, just don't understand the why.
Yeah.
So.
I mean, I can even think of a case right now in terms of the life insurance of, well, how much is the right amount? You know, we get asked that all the time. And the challenge with answering that question correctly is, well, it depends. And I hate saying that as a financial planning answer, but the reality is it is, because let's say you have a family, right? They have a mortgage, they have young kids. There we're looking at, we want to replace not just the future income, but we want to pay off liabilities. We want to make sure that future goals are taken care of. But let's say we have an older family where, hey, maybe the mortgage isn't as big of a deal. The goals are mostly taken care of, but maybe they're spending a significant portion of their income. So they're very reliant on their income. Well, if they're very reliant on their income and disability is still not going to cut it, or there's a catastrophic event, well, then we're not looking at paying off liabilities or future goals. We're actually looking at the income replacement. So there are different formulas, different ways you can come about the right amount, but it's different for everyone. So
yeah, no, that's really helpful. So all right, so when we kind of break this into when we're doing a plan, and now we kind of hive off these different pieces, and so insurance is one part of it. You've mentioned this, you'll often look at like the net worth statement, which is very simply what you own minus what you owe.
Correct.
And that's what you would have left if you were to sell everything that you own, pay off everything you owe, whatever is left is your net worth.
Yep.
That's an amount you're really trying to protect. Tell us why we need to protect that.
Yeah, so like I said it before, we all go through our lives with varied risks, right? So whether we're driving our car and we get to an accident and we're at fault, or someone comes over to our home, slips and falls and has a significant injury or something like that, we want to make sure that the assets we worked really, really hard for, the what we own minus what we owe, our net worth, we want to make sure that's protected. And the importance of, let's say, liability protection in this case is to say, well, we're going to make sure that your net worth is protected. Now, the reason we use net worth as a proxy for that amount is it's a relatively easy number to get to. You could get to more specific answers because certain accounts are protected from creditors and there are ways to shelter assets otherwise. But at the end of the day, it also works out to a situation to say, well, we can make it as complex and complicated as we want, but oftentimes the simplest answer is sometimes the best. So.
Yeah. No, that's helpful. Okay, so while we're here, let's just define, because I actually feel like a lot of people may not know, like we're listing off these different types of insurance, but people may not even know, like, what is that? When would I use that? So let's just go really quick, like home and auto, which you've called property and casualty, which you'll probably hear, like if you go to get this policy. So like home, auto, renters, what is that covering?
Yeah, so we'll pick on auto at first. So it covers primarily two things. One, it covers your stuff, right? So your vehicles. Let's say you're driving and someone gets into an accident with you. They're found at fault. Generally speaking, their liabilities should kind of take care of you, right? But there are situations where they don't have proper coverage or proper amounts of coverage. So one of the coverages you can see on your auto policy is uninsured or underinsured, and that steps in to help fill the gap. Conversely, let's say you're driving and you're found at fault for causing the accident. Well, now there's a portion of your auto insurance that will help cover your car. That's the collision aspect of auto insurance. And then let's say your car's parked and some sort of damage comes through, hailstorm, tree falls in and stuff like that. That's where comprehensive coverage would come in and kind of protect your stuff. But the other bigger aspect that I tend to look at for auto insurance is the liability side. Really the aspect of if you're driving, you cause the accident, if you get sued, you want to make sure that you have proper liability so that you're using the insurance company's lawyers to help fight and prevent your assets from being taken.
Yeah. And just, I mean, on auto specifically, I have seen, like in my career, I have seen a client who had a really high liability policy. I mean, a few million, and they, it's one of those things where sometimes, like you said, you kind of feel silly for like buying this much, but it's protecting, if that's your net worth, you're protecting that amount. And they were sued in an accident, and so it's now the insurance company's job to fight that out, because the insurance doesn't want to have to pay that. But it's so much better than you having to say, well, wait, I don't want you to take my money out of my net worth. Like, you'd literally be paying them if the insurance was not covering that for you. So in these instances, that's the role of the insurance. If you're in an accident, if something happens to your stuff, that's the purpose of this, is that you then don't have to pay the damages for that. The insurance company does that.
That's exactly right. You're essentially offloading the risk to someone else. And in exchange for being able to offload the risk, you pay a premium, right? So for you to say, hey, if this really bad thing happens to me, you're going to come in and provide substantial money to help fix it. And in exchange, I'll pay you a little bit on a regular basis. So that's generally how that works. So that's auto insurance. Home insurance, very similar. But the other big aspect on home insurance is, well, you need to make sure you're covering your house too. One of the things to think about there is home insurance is more split between liability and covering your dwelling. So one of the things to be mindful there is, do you have enough dwelling coverage, which is generally coverage A when you look at your home insurance policy. More often than not, we actually see that coverage is way inflated, but it's one of those things you can talk through with your insurance agent to see what's the right amount in terms of what is it going to cost to replace your home if you have to. Again, we're not insurance agents, so we don't see the exact specifics of what actually that amount needs to be, but we can just come alongside and say, well, this seems high or this seems low. Have a discussion with your insurance agent to figure out what the right amount is. In the example that you shared with the client that had a significantly high liability limit, there's a third coverage with property and casualty, which is called umbrella. And this is a really often overlooked area that you can take advantage of. And the reason that this is so nice is because umbrella coverage is generally super, super cheap. We're talking for the first $1 million of coverage, somewhere between $300 to $800 a year. So we're talking just a couple $100 for $1 million of coverage on top of your existing auto coverage or home insurance coverage. And the reason that's important is, especially for clients that have high net worth or have significant assets, you want to make sure that you have higher liability coverages that you're not as much of a risk or target.
Exactly. No, that's helpful. Yeah, home, auto, and umbrella, they're interesting because they have a component of where you're insuring a thing. So if something happens, you need to replace your home, you need to replace your car. Whereas now, if we talk about life insurance, there isn't necessarily a thing we're replacing. It's wages, but now talk us through, so life insurance, when I buy life insurance, what am I actually buying?
Yeah, you're basically buying the insurance company's money. So there are lots of details and ways to get around it, but I like to boil it down to how much insurance company money are you buying and how much are you paying for that insurance company money.
Yeah, so that when you pass away, your beneficiary gets that amount. Like,
Correct.
This is the amount of money they're going to give you if this happens.
That's exactly right. So there are lots of different types, as I mentioned before. The first one that we generally steer folks towards, because most of the time that makes the most sense, but is term, right? When you can simplify an insurance contract to really the core aspects of what it needs to do, you tend to have better results. There are elements where you can have what's called a permanent policy. So here we're talking whole life, universal life, variable universal life, and you've got a whole lot, a whole slew of other variables that are influencing how much you actually paying for that insurance. I always like to boil it down to, okay, how much insurance company money are we buying? And how much are we paying for that insurance?
I think what's so interesting about this that I've noticed is, when a client comes in with a life insurance policy, especially, let's say it's one that I feel like a lot of times, people will kind of, they either know why they have it, they know why they got it, when they got it, or they don't. And it's almost kind of like, I just kind of got this. I didn't realize what I was getting. It's one of the two. I feel like we kind of view it as, okay, what can we do with this policy?
Yes.
And so it's really kind of just like, as you're digging into it, you're really reading it for all of the terms of the contract. You're really trying to see what are the dates, the surrender charge dates or amounts and things like this, so that we can actually say, can this be used in your financial plan? Like, is this an asset that you have that instead of using it as insurance, we're going to use it in a different way and turn it into the asset it is?
Correct. And I think there's a misnomer out there that if you have a permanent life insurance contract where you have a cash value, that it's inherently bad. I'll just say point blank, that's not right. There are situations where it's not appropriate for your financial plan, but there are instances where those permanent policies do make sense. Now, that's not to say that they always make the absolute most sense for clients. But I also don't want to step into a situation where, hey, this wasn't the optimal situation for your financial plan.
Yeah.
You made this decision 3, 4, 5 years ago. So let's just cancel it and go on.
Yeah.
Because there's actually value still in that contract to say, hey, it made decent sense then. How can we make sure we're making the best decisions with this contract on a going forward basis?
Exactly. No, I think that's great. Okay, disability. What is that insurance? What am I buying?
Your income. So we want to make sure that as you are working, your income continues to grow, that if you get into an accident or you have a disease or something like that, or an illness, that your income it continues to flow in.
Even though you can't work.
Exactly right. So there are generally two types. There's called short-term disability or long-term disability. Most often what you'll see is your employers will provide this as a benefit to you. The most common amount that you'll see coming through this is a 60% replacement. So if you make, just to make math easy, if you make $100,000 a year, 60% of that means that they're going to pay you $60,000 a year. Generally speaking, it's going to be broken down to a monthly or a weekly amount, but it's going to be a factor of that, $60,000.
Yeah, yeah. And I think that's what's interesting. Something I also notice is I feel like people will kind of say, well, how do I get to the 100%,
Yeah.
And like, can I be 100% insured? But if that were the case, it'd almost be like incentivizing you not to work or to become disabled.
Yeah.
So, I mean, it's just interesting. There's like reasons for, some of these limits or reasons why at some points insurance gets so expensive because it's costing the insurance so much more. And in the likelihood of that happening is so much greater. Yeah. So they're saying, well, you have to pay us more because it really is this offloading of risk. And what's the cost to do that?
Yeah, there's a term in the insurance industry called adverse selection. And what that means is the people that are most likely to use the insurance are the ones that are also most likely to buy it.
Yeah.
Now, the reason that's an issue is because if you have a whole lot of people that are probably going to use the product and are going to use the insurance, well, then the insurance company is going to be out more and more money. Well, if the insurance company is out more and more money, then in order for them to be profitable, they have to charge more. Yeah. So it's kind of like a vicious cycle where you want to balance things in such a way that you have the insurance coverage that you need, but you don't want to take on more than you absolutely need, because if you have a situation where people are using it and abusing it, then there are other unintended consequences as well.
Yeah, exactly. Okay, health insurance. What are we buying there?
Yeah, so that's basically if we get sick, we want to make sure that our doctors and our nurses and our hospitals can get paid. They're unfortunately just the world we live in. Health costs are just really, really expensive, and they keep going up, and they go up at a very fast rate. And I hear folks when they say, health insurance is just so expensive. It's just so expensive, especially even when you get it through your employer. It seems like it's only getting more and more expensive. One of the things where I have to kind of be the bearer of bad news to certain folks is I understand that what your employer is charging for their health insurance goes up, but there's the other side of it that how much your employer is actually covering for your health insurance is a huge portion as well. I don't think a lot of folks we connect with always understand that, yes, there's a portion that they're paying, but there's also a significant portion that employers are paying. So the true cost of health insurance is really, really high.
Yeah.
But in terms of what we're actually protecting, if we get sick or go to the hospital, it's really important to make sure that we're going to get the care we need. And we're going to make sure that we're not going to be out of pocket, so we don't have the hospitals or the doctors coming after us down the road.
Yeah. I think after this one is a really good chance just to talk about like another form of insurance is self-insurance or choosing not to get insurance, right? That's a choice that people can make.
Yep.
Health insurance, like I feel like this has really become kind of a controversial area, especially health insurance, because there's, besides just your traditional, I get a policy through an insurance company, there are now these insurance co-ops where you're kind of, you're paying a much lower premium, but you aren't quite sure if when you need to take funds out that it's going to be covered, right?
Yeah, so there are a lot of ways to slice it and dice it. I would say health insurance got really I would say complicated back during when Obama was president, and Obamacare was a big thing, right? So the official term for Obamacare is the ACA, or Affordable Care Act, but that made a lot of changes to health insurance generally, and that's where we started to see a lot more of these co-ops becoming more of a thing.
Because insurance was required. Like there was a period where like you had to have it, and on your tax return there was a document you had to show that you had coverage for the year.
Yep, and if you don't, you basically have penalties associated with that, right? And there are lots of reasons, and for going through all that. But that was one of the catalysts for understanding why these co-ops became more of a big thing. Now, all these co-ops are very different. I'm not going to sit here and say, hey, this one's good or that one's bad or any of that. I think it's a very personal decision to say what's going to make the most sense for you and your family. The places where I probably give pause with those is because they are not strict insurance. Unfortunately, you're in a situation where now you have to negotiate with hospitals or doctors to say, hey, here's what I have. I would basically be a cash payer. How can we negotiate this price down? And then you're also generally reliant on the other members of that co-op to send in their checks, or whether it's to a central organization and then sending payments to you. So there are a lot of ways to slice and dice it. It's not as cut and dry as, hey, I'm just saving on premium.
Yeah. And I think that's just one of these things where it's so hard. I remember when we started our business, and after leaving our previous employer, there came a point where your insurance runs out and you have to make the decision. Are we going to get a policy? And it's not even just small business owners will know this. It's not as easy as I want a policy and I can go get it. Steve and I at the time, and you can't get a policy if it's just the two of you and you and a spouse. Now, if it was myself and someone else unrelated, then we could. So it's very interesting how it's even tricky to get a policy. So things like that. And we had to decide, we were kind of like, do we do more of this co-op option because it was cheaper, or do we know that it's going to be expensive and get insurance, figure out how to do that. And I just couldn't get over the hurdle of, I don't know what this expense could be, the unlimited amount of risk. And so it was worth it to have expensive health insurance. So it was just even thinking back that personally, I couldn't get over, I don't know what we would have to pay, and that could be an unlimited amount. And so knowing that it's expensive, but it was worth that. So it is, you have to decide for yourself, what is that amount I'm willing to pay versus the unknown amount I might have to pay. Yeah,
I think as I kind of approach that delineation there, I kind of work it as, my risk on one side, if I don't have the insurance, is, as you're saying, unlimited. Because your expenses could be in the millions of dollars. In our healthcare system, that's very possible if you have a severe illness or injury or accident, right? Conversely, if you do have health insurance, you're in a situation where your total risk is capped, right? It's capped by the insurance premiums that you pay in conjunction with what is your deductible, what is your out-of-pocket maximum. And it's nice to have that certainty to say, hey, in a worst case scenario, I know, here I go again. In a worst case scenario, here my total cost is this. Can I plan? Can I work around this cost? And if the answer is yes, and it still works from a budget perspective, we can say, okay, hey, we know what this is. This is a known. We don't know what the other side is going to be. So therefore, let's take advantage of our known. Yeah.
And I feel like we just talked about that in health insurance, but with all of those, there's an unlimited or unknown amount of risk. And so you're doing the same thing, deciding, do I get insurance? Okay. No, I feel like this is really helpful. Kind of a worst case scenario, if you were to just say the worst case scenario, or any type of insurance is basically that you don't have it and the worst happens.
Yeah, basically, let's say the scenarios that you planned out, or maybe you didn't plan out, those come to pass, and you didn't properly prepare for it, right? Because now we're in a situation where either your family is left hurting, or you're left hurting because you're trying to basically climb out of a significant hole if you have, significant medical debt or something like that. So I would say the worst case scenario is understanding that as we go about our lives, we have these risks as a part of our lives. If we're not properly prepared for them, the worst case scenario is that they're going to come
and that they could, and we hope they don't. But I feel like talking about insurance, it's like all this risk. It is like heavy stuff. We're kind of like, it's not fun stuff to talk about, which is why everyone kind of says, insurance, and we're like, no, let's dig into the details. Because thankfully, I can't think of a lot of client stories where they had where the worst has happened or something bad has happened. Like, that's what I'm thankful for, is that we have made sure that these things are in place. So that clients are covered and those things don't happen, and their financial plan can continue what they want, and their plan and their goals are reached because they do have these things in place. So
in a weird sort of way, you kind of hope that insurance is actually a wasted expense. It feels weird to say that. You want to actually kind of throw money away, but it's not throwing the money away. It's giving you peace of mind. It's giving you confidence that your financial plan is going to work. So.
Yeah, exactly. Okay. So no, this is, I think, really been helpful just for people who may not even know what are these different types of coverages that we talked through a lot of things, scenarios. So from here, just kind of like, what can people do with this information?
Yeah. So first thing is, go home, open up your safe, because I'm sure that's where a lot of people put their insurance policies and haven't looked at them since they purchased them. Pull out the policy. Take a look to see, are the ownership titlings, is that right? Does it need to be owned by you or your spouse, or maybe a trust is involved? Is the titling on that contract right? Secondly is, are the beneficiaries correct? We'll see a lot of times where folks will name a parent or maybe another family member a beneficiary just to get the policy in place. But since that point, they've been married or they now have kids, and the beneficiaries haven't gotten updated. So now you introduce a whole web of complexity that if something were to happen, how do you to fix that? So pull the contracts out, take a look at them, see who the owners, beneficiaries are. Do you have enough coverage in place? When you're going through open enrollment, which is generally in the fall, you want to take a look at what are the healthcare options or health insurance options, that your employer is offering. What are the disability options that your employer is offering? Is there a buy-up provision where you can convert a pre-tax benefit into a post-tax benefit? And are there other types of insurance? Like you can look at a legal insurance where you can purchase a legal plan and get some documents or other stuff in place as well. So no, that's really helpful. I think too, like if this is something, this is again one area of a financial plan. So if you feel like you've been telling yourself over and over, this is something we just need to look at, or a lot of people will kind of push this off, and then once they have kids, okay, now we really need to get this done. If you find yourself as you just have a lot of insurance questions, you're not sure if you have what you need, as well as I just need to make sure we're on track with our financial plan. I really just want to make sure that we know we're doing what we should be doing. This is exactly what the purpose of our financial planning services are. So for ongoing clients, as your life changes, these are things we're always thinking about for you, and we're always talking about, so that we don't look back and say, I forgot to do that. This is the goal, is that we're talking about it and updating those things as we go. Thank you, Trevor, for explaining this, talking us through a lot of information. This is helpful. Absolutely. Thank you for having me on.
Yeah, thank you. All right. You heard your call to action. Go get your policies, find them. If you have questions, you can always call your agents. They can answer questions. And if they can't, this is where you can say, okay, I just need to get some help understanding what I have. And if this is just one piece of your overall finances that you need to get checked, and you just want help managing because you don't have the time or the interest or the knowledge to do it for yourself, that's exactly who we help and what we do. So you can take a look at our website. We list all of these different types of services that we provide to clients. But if you enjoyed this, then listen in a couple weeks. We'll talk to you soon. Thanks.
Thanks for listening. To find any links or resources related to this episode, check out our show notes. Your host was Michelle Smallenberger, a certified financial planner and CEO. The guests featured are from Financial Design Studio, a team of experienced, fiduciary, fee-only advisors based in Chicago. Anna Lewis is the executive producer of the Behind the Designs podcast. And as always, for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. And final note, no content discussed on this podcast should be taken as financial advice. Financial Design Studio accepts no responsibility for your individual choices. We'll see you in the next episode.